My name is Tom, I'm the crypto investor, and today I wanted to get a bit macro on your ass and talk a little bit about what's going on in the stock market because it is weighing on the crypto markets. This is the S&P 500, that's the top 500 companies in the United States of America, and you can see that ever since we had the big COVID crash, we have just been channeling very easygoing upward nicely. It's been very easy for investors. In fact, we haven't even seen a 5% pullback for over 200 days. It's just been plain sailing. But of course, if you've been watching the markets, you will have noticed that we've just had a break of this. First time we had a few little fake outs, and this could turn out to be a fake out. But there's two things that are driving it right now. So we have the Evergrande liquidation crisis happening in China. So this is the $300 billion of debt that they can no longer meet their liabilities on. And there is concern, of course, that could create contagion and concerns. It could be a domino, like the Lehman Brothers event of 2007, 2008, and it could lead to other companies getting into trouble. And then the other thing we have going on is that the Fed are meeting this week, and there is talk of the tapering of their bond buybacks. So every month since COVID, printer goes burr, they flood the bond market with $120 billion every single month. And let's just look at that. So we can look at that on Fred economic data, and you can see this is the dollars printed in history, and you can see that it just went mad parabolic once we had the COVID moment. I can also show you that on TradingView here. It doesn't really work in candlestick formation, so it's best to show you that with a line, but there you go. This is that same chart, and you can see that the trajectory just got ridiculous of late. And so it means that we get a stock market that does this. We had the previous stock market high here, and then you pump in all this cash and you get the stock market here. So what I think is quite interesting is when you compare the two together. So we compare the S&P with that monetary supply, and we get this. So this is the S&P. It's on the weekly chart when cross-referenced with the monetary supply. So here's our COVID peak, pre-COVID peak. Just to remind you, that's here. And this, hold the phone. And this is our peak now. So you can see that if we actually account for all the money that's been pumped into the system, we only just got higher than our previous peak back in February. And obviously we're now below it. So, what does this tell us? Well, I think it's just very important to understand a few things. One, it's why you have to hold your money in assets, because if you don't hold your money in assets, they get eroded by inflation. It's why we're forced to play the casino of investing effectively, because if your money is not in assets, it is guaranteed to go backwards as your spending power is reduced. And so I just think that's quite an interesting observation for people to understand, to realize that, the stock markets may seem really high, but we're actually basically back to where we were more or less. And in fact, you can go all the way back to 2007, the financial crisis, and we're only back to there again. So it almost feels like, again, when you look at price to earnings ratios for businesses and stuff, it almost feels like this is a peak that markets kind of can't get to, can't get beyond. And yeah, it just makes me a little nervous about how much upward potential there still is left in the stock market when you when you take out the money pumped into the system. All right, last thing I wanted to share with you. I just did some charting this morning that I thought was kind of interesting. I basically took away all of the previous noise I had on there and just looked very simplistically at Ethereum and just put on two obvious trend lines and this trend line, and this is what you get. And I think, one, there's a very strong case for a potential double top here. Top. And typically in technical analysis, if you then get on the third attempt a failure, then that can signal a move down. So a double top is a topping formation that can be quite bearish. It can signal reversal. So that's one thing to be a little bit scared of. And I've kind of, obviously I've drawn on this kind of wedge pattern. Now, maybe we can't do that, because if we do get that third reversal, we could really move back down. So we probably need to actually break out a little earlier. We probably need to break out here and have that move come out, which would put us in a breakout around December or so. Looking at Bitcoin, not dissimilar, except of course we haven't put in a high with Bitcoin as high as the previous one that we did manage in April. So we've got more of a wedge kind of penalty formation going on with Bitcoin. So based on this, I would anticipate that we might come down, we might find support around the 38,000, come back up, 45, 46,000, and then break there, or tighten a bit more and break up. So, just getting macro on yours, I think this is it's a possibility that we kind of see this play out, or we see something like this play out with Ethereum. I'm very much, I have a long-term macro thesis when it comes to investing in these cryptocurrencies. I believe that they continue to play a more and more important role in our global economies. And so I'm here for the long term, but we also want to know when best to take our profits, obviously, as well. So yeah, anyway, that's it. A little bit different. If you did like the content, if you do find it useful, please do hit the like button. Please do subscribe. Please share it with your mates. We need 2,000 hours more views, and then I can actually get monetized on the channel, which would be nice. This is not financial advice. I'm just a guy on the internet, just sharing his thoughts, and I'll speak to you soon. All the best.